Hello and welcome again to EMS Now Up Close. I'm Eric Miskell with EMS Now, and today I get to speak with Dale Ford again. Dale, of course, is the Chief Analyst for the Electronic Component Industry Association. For brevity, we just call it the ECIA. It's flows so much easier off the tongue. But yeah, Dale, you were kind enough to participate in a webinar I did a couple months ago in conjunction with TTI to discuss the material supply chain and what's happening there. But there was so much information that you had just presented, I believe, at the ECIA Executive Conference that I was able to take a look at. So I thought it would be beneficial to have a sit down and let you speak in a more relaxed pace about some of those issues, because I think there's some great insights that we can pull from that. So thanks for making yourself a victim again today for me.
My pleasure.
Let's start kind of big picture, and I'm looking at some of your slides here, so I'll try not. But how would you characterize kind of the electronic component industry as a whole, and where we are as we're ending 2023?
Well, I think that perhaps the best way to describe it is that I believe we're at the bottom of the trough. We have gone through what I would consider to be a hard landing versus a soft landing. The slope on the backside of this curve has been much steeper than what we would have hoped for, I guess. But I guess the benefit of that is we can start the recovery sooner now that I believe we have reached the bottom. In fact, confirming more of what I had seen, was expecting back when I presented at the conference, it's now clear that we have reached the bottom of this cycle. And I noted that cycles typically in the semiconductor industry last a little bit less than 4 years. And in this case, we were coming up, I believe, on 46 months in the cycle. And so with that 46 months, based on the averages of the prior cycle, my expectation is we were at or close to the bottom of the cycle. And the last 2 months of data reported by WSTS have resulted in an upturn in the year-over-year growth rates, the 12s. We call it the 12-12 growth rate. So this cycle will have lasted 46 months. And like I said, the typical average is around 47, 48 months in prior cycles. We've had a couple of outliers, but we've now reached that average. And thankfully, the last two periods have shown an upturn. Now, there's nothing saying that we can't have something dramatic that could turn that around, but setting stronger expectations that this annualized rate will continue is that the quarter-over-quarter growth rate has now continued up strongly. And in fact, if we look at that quarter-over-quarter growth rate, we're now looking at just about, just hitting parity, just about zero. So we've gone from a quarter-over-quarter growth rate that was down about 21% at its bottom, and now we've rebounded it back up to, I guess you could call it break even. That's what you could call it, I guess. Okay. So we are now looking up from the trough of the past cycle, and we're now looking forward to the rebound in this cycle. So things should be, I guess you could say, looking up. I wouldn't say they're coming up roses, but they're looking up.
Looking up from the trough. Let me, a couple of things here I'd like to unpack. One, and I'm looking at what you've done, your analysis of the different cycles over the years, I think dating back to 1978, actually, I think is you had this wonderful comparison here. And that's what informs your thing about the normal length of them. Is there anything that you can say about how they come out of that then? What's the trend coming out of those? Is there any thing that's insightful there?
There, I would say if you look at all the cycles, there's a wide variety of shapes and sizes to these cycles. We've had some where it's just been a skyrocket and it's just, driven up to a high peak and then it comes down very quickly on the other side. So we've had some that are very sharp in their upward trend. Others that you could say barely look like a cycle. They're just lethargic and drawn out, and there's kind of a weak recovery, and it's a weak cycle, but it never reaches a notable high before it comes back down. In fact, just as I look at that data myself, it wasn't that long ago that we had a cycle. It would have been a cycle that started in February 2006, and it was an extremely weak cycle. And also, I would say that the cycle that began in September, let's see, September 2012. Those were very, very low cycles, both of them that reached, very low peaks. The peak of the September 2012 cycle was less than 5%, and the peak that we had in the cycle, let me bring it up here, that was in 2006, was a very low peak as well. It came up, just below 10%. So we've had some very low peaks, but on the other hand, we've had some cycles that just took off. If we look at the cycle that started in 2009, September 2009, that just took off and peaked at over 37%. And then we have everything, there's one more cycle, I should say, if you go back to February of 82, which was driven by the PC boom that, went off the charts literally. But then we have everything in between. Okay. And in fact, for some years, it was not unusual to have a cycle begin, then it would reach a certain point, it would reach a pause before it would go to its eventual peak. And my theory of those pauses were they came in a period when we were still struggling with how we managed inventory in the supply chain. And I believe those pauses took place when we reached a point where we had to sort out the inventory, adjust the inventory, and then once that was resolved, we pushed to the eventual peak of that cycle. We haven't had those pauses in recent cycles. That seems to be an issue where we've sorted out the supply chain more effectively and how we manage through inventory. In one sense, I mean, clearly we've gone through a difficult inventory that we're working out still now, but they're very different shapes and sizes.
Okay. Well, and that's what I wanted to check too, and what you just said, the inventory. So the inventory is made up of all these different component categories as well, and obviously the semiconductor is the big one that everybody talks about. We talked about a chip crisis. We didn't talk about a passive crisis, right? We talked about so how are the different sectors doing that you track?
As we track it, the interesting thing is that the passive component sector, in particular, we make comparisons between capacitors and semiconductors. They mirror each other, I guess you could say. And in some ways, interestingly enough, the capacitors kind of lead the semiconductor in hitting the turning points in the cycles. And so they do mirror one another. Now, there are different dynamics in play. We've hit shortages in the capacitor realm. I remember, back in 2000, the big issue is that we couldn't get an adequate supply of tantalum. And so there was a huge tantalum capacitor shortage that impacted the production of, I think that was pre-smartphone era, but digital mobile handsets at that time. And so we ran into that. We also ran into a period where the MLCCs, multi-level ceramic capacitors, there we did have an issue with the manufacturing capacity, but there wasn't so much, it was more the economics of putting in place new manufacturing capacity. You might say the return on investment that became a problem there. So we have had a few periods where capacity and supply in some of the passive categories has been a problem, but not, I guess you could say, not as frequently as I believe we've experienced them in the semiconductor world. It's a bit more volatile in terms of the timing of investments and how long it takes to bring a new semiconductor fab online. So we've had those, but in general, they follow each other. And my belief is just as we hit, I have yet to roll up the latest numbers that we're getting for Q3 of this year for the passive categories. I'm working actually as we speak to roll those up to see what Q3 came out. But my sense is that Q2 will show the bottom of the cycle for most of the passive component categories as well. I think we'll start seeing an improvement there here as we move towards the end of 2023 for the passives areas also. Unfortunately, for electromechanical, we don't have good statistics for the electromechanical categories. We're very spoiled, really, that there's such a culture of participating in reporting statistics in the semiconductor area. That same culture just doesn't exist in the electromechanical, the connector component categories. There's not a culture of cooperatively participating in statistical research in that area. So it's harder to measure it there.
Yeah, fair enough. Now, what about as I look at the data too, it strikes me that, the end markets, the products that these are all going into certainly is a driving factor behind a lot of this. And we talk about EVs as being really a big story over the last year or so. How do you view and judge those items?
Yeah, it's a different factor on the worldwide level than it is on an America's level. So as we shape things up on a worldwide level, you have the mobile handsets, the smartphones, and consumer electronics that are very important drivers, and after that, compute platforms that are important drivers. On a worldwide level, automotive has become important, but still lags behind in terms of size and its ability to drive the market than those other three. In the Americas, the most significant drivers are the industrial segments, the automotive segment, medical electronics, and military aerospace. So those are the most significant categories that we see in the Americas as far as driving the market. Now, you mentioned electric vehicles. There are a few areas that have the potential, I believe, in this coming cycle to drive the market. One, where I believe on a worldwide basis we'll get some relief, is that we're now seeing forecasts from some of the major market research companies that they're forecasting a return to growth in the smartphone category. They're saying 5G getting enough traction that we've gone through a couple of years of a decline in the overall smartphone market. They're seeing that turn around, not dramatically, but they're starting, it's at least a return to growth. So that will help on the worldwide stage. Now, other areas that have been pointed out, I would say, are electric vehicles, as you said, I'll come back to that, and artificial intelligence. I would say people have been expecting artificial intelligence to become key, but I think it has almost exploded onto the stage faster than many had expected with ChatGPT. The electric vehicles are, and in terms of expecting their impact, are somewhat problematic. We've had a nice start to the growth of the electric vehicle market, but as you know, there's been a strong pushback from many sectors, including the consumer. And you've now got a large number of dealers that came together writing a joint letter to the government saying, you need to give us a break on the electric vehicles. They're piling up on our lots. They're shutting down manufacturing at the manufacturers. And so we may have gotten a little out over our skis, as they say, when it comes to jumping into the electric vehicle market. And so, yes, there's opportunity for much richer semiconductor content. And yes, we've had an initial surge, but Gartner has their hype cycle that they show, and there's what do they call it, the chasm of despair or something of that nature. Yes. And I think we may be coming up on that chasm with regard to electric vehicles. Now, concerns associated with electric vehicles are the range that they offer, the number of charging points that are available out there. There are a number of concerns. Now, coming back to electric vehicles, the encouraging thing is that we're seeing some real exciting developments in the world of batteries. Now, I've been tracking emerging technologies for the entirety of my career. And the one segment that's always been just the laggard and really, hope I don't offend anybody, but almost a disappointment, is how fast battery technology has advanced. But now that we have this pressure and the need, we've seen some exciting advances from major players. So Toyota, for example, they're the largest patent holder for solid state batteries, lithium solid state, and they have some breakthroughs there that will dramatically expand the range of those batteries. And as a side benefit, they don't explode when you get into an accident.
Yes.
And then you have China. They're pushing their own efforts. Their BYD vehicles. They have their sodium chloride, something of that. I can't remember exactly. They have another chemistry that they're pursuing. So we have some new chemistries that are coming into play that could afford the ability, and they're also much lighter weight, I should say. And so because these batteries are just beasts, 2-ton batteries, and so they're lighter weight. So I think that if we can sort out the battery challenge, that will probably help us. I think Toyota is looking at like a 2026 timeframe to be able to start delivery of their new product. And so we might go through a couple of years where we kind of will be a bit in the wilderness, you might say. People trying to sort out what the production levels will be and how we work through that. So electric vehicles, we've had a big surge. I think we're going to have a little bit of a difficulty in the next couple of years, but there may be opportunities for return to momentum there. Artificial intelligence, already, I believe that you're seeing the boost coming there in servers and what's taking place there. So that's driving demand. That's what's driving NVIDIA's stock through the roof, right? NVIDIA has become suddenly this huge powerhouse, AMD challenging them, others trying to challenge them. But these chips tailored for artificial intelligence are really grabbing hold. They're shipping in high volumes now for servers. And we're now looking at getting solutions for AI on the edge, as they say it, where you don't have to go all the way back on the cloud to the server, but you can do more AI processing on the edge. So there's a lot of architectures and technologies there in AI. So there are some exciting areas that can help us with some of the growth that we're hoping to generate in this current cycle.
Okay.
I'm sorry, I kind of went on a bit too long there.
No. Actually, it was perfect, Dale, because you covered some topics I was going to ask you about batteries later on. So we've already covered that. So that's perfect. Listen, but what I wanted to also check with you is, the big talk for the last, especially within the EMS companies over the last year, has been this inventory overhang, right? After everything that went on, all of a sudden they were sitting on all this inventory, and the overhang was there. But prior to that, there was the discussion, are the component manufacturers investing enough to build more capacity to provide this seemingly unending appetite, right? And that's a delicate balance, as you well know, right? Between, you spend it now and then all of a sudden you don't need it, and then you look dumb in the rearview mirror maybe. So how do you see those two issues kind of balancing?
So I think the issue with capacity is most it's accentuated, I guess you could say, in the semiconductor space. Bringing on new capacity, while there might be ROI issues that people look at, I don't see that as much an issue in the passives world. But in the semiconductor world, with these tens of billions of dollars of investment that are required, and you've got pieces of equipment that cost $1 billion each, that is a big issue. And there are a couple of very interesting things taking place. One is that with the CHIPS Act in the US, everybody's very much on board with the need to return semiconductor manufacturing to the Americas or to friendshore capacity. And so we've got notable announcements taking place and efforts in multiple regions of the United States. Now, there's issues that come up with that. We've got, I should say, somewhat of a painful issue in the Arizona area now with TSMC and their efforts to build a fab there. You know, it's not an issue of getting the equipment. The equipment is available. You know, we have some of the big players here in the Americas or in Europe, so the equipment availability is there. But there's different cultures between the culture of a TSMC in Taiwan and how they run things and how we run things in just manufacturing, building the building. You know, we've had conflicts between the unions and TSMC there in Arizona. But beyond that, eventually the big issue that's going to come up is having a workforce that's trained to actually operate the fab. And that's where we have a skills shortage, you might say, in the Americas. And in the near term, TSMC shipping engineers over to the US from Taiwan to help in the near term. But eventually, we have to be able to have trained professionals in those fabs. And we have to have a workforce willing to be, you know, somewhat blunt, to work in a bunny suit all day. You know, workers in the Americas are not accustomed to those types of situations. Now, perhaps as we transition workers from some workforces like the fossil fuel industries and whatnot, where they're used to challenging environments, maybe we find a good source of you know, labor that could be trained and could step into this type of environment. So that will be an issue. Now, let me come to just a couple of other points, and then I'll come back to a key point. You know, China as well is racing to put in place manufacturing capacity. There was interesting statistics. If you look at the top companies, Lam, Applied Materials, KLA, these top semiconductor equipment manufacturers, their shipments of equipment to China have grown by 40% in the past year. So China is really working to get out ahead with their concerns about potential future embargoes, right? They're anxious to not, you know, be clipped at the knees by the U.S. Embargo on semiconductor technology. So they're out racing to get equipment and to bring on capacity into China. And Europe and South Korea and others, they're also making investments that are even larger than our CHIPS Act. So we have a lot of capital that's flowing into the semiconductor industry right now. Now, a question that was raised, a good question that was raised by one of my colleagues in the semiconductor industry, said, you know, the key question comes as this, particularly in the US, are we building capacity to try to protect ourselves from potential national security issues, or are we building capacity to meet what we expect the future demand will be? If we're simply building capacity to protect ourselves in terms of a national security issue, we may be overbuilding and we may be setting ourselves up for bringing on excess capacity in this upcoming cycle. And so there are many dynamics at play that people are going to have to work through.
That's, yeah, and that, I saw that comment in one of your slides, and I found that very interesting because, you know, and you don't know at this point, right? So that's, you know, how much is it and how much is really deemed national security? I mean, we know the general areas, but even within communications, there's certain communications devices, as example, that would fall within that realm.
Right. And so yeah.
That's interesting. So, or it could be a bit of both, right? I mean,
A bit of both in what sense?
I mean, it's not one or the other. We're not either just building for what we're hoping and or building for national security only. You know, hopefully there's a bit of both happening within that justification.
Yeah, yeah. I mean, protecting ourselves in terms of supply chain, reliable supply chains, that comes into play. Just in terms of end market demand, it's good and it's bad. I mean, the most robust sector in the Americas has been military aerospace. Now, unfortunately, that's due to our challenging hot wars that we've got going on in the world right now. So that's clearly driving some of that demand.
Mhm.
Yeah, there's
Yeah.
demand probably in civil aerospace and whatnot, and in the space sector, there's exciting things.